So, you need to understand what you're signing up for, because when you get a mortgage, you have a possibility of losing your home if you don't make the repayments. You are signing a very, very, very long years and years and years document to say if you do not keep up with your mortgage repayments, your house could be repossessed. Welcome back to the Home Stretch podcast. Today's episode is all about what is actually in your mortgage offer. I do feel like when I first started the process and, your mortgage offer comes through, it just confused me so much. There were so many words that I didn't understand, didn't have a clue what a product fee was, didn't get that at all. And just there's a lot of jargon in there that I couldn't quite understand. So I feel like I wanted to do an episode today just in plain, simple terms about what is generally in a mortgage offer, just so you can kind of get a general understanding, different red flags to look out for. And your mortgage and your mortgage offer is probably one of the most important parts of your house buying process, because this bank or whoever is lending you all this money for your property, it's a lot of money usually, okay? And they want to make sure they get it back and then some. So, you need to understand what you're signing up for, because when you get a mortgage, you have a possibility of losing your home if you don't make the repayments. You are signing a very, very, very long years and years and years document to say if you do not keep up with your mortgage repayments, your house could be repossessed. And that can be quite scary. But I feel like a lot of us first time buyers, we don't look at it like that. We just think, exciting, we're having our first home. We never think, oh no, we could actually lose our house and potentially lose the money we put into it. And yeah, it's quite scary when you think about it. Like when me and Nathan first got this house and we moved in, you kind of have a little bit of like buyer's remorse, a little bit. And then it kind of hits you and you kind of think, oh, this is we're in the long game. We've got a house now. It feels like a lot of pressure, even though you've been spending so many months getting the house that you so desperately want and need. So yeah, it's an interesting one. But your mortgage offer, that's the transaction you're having with the bank or whoever your lender is. So what even is a mortgage offer? A mortgage offer is an official confirmation from your lender that they're willing to offer you and lend you a certain amount of money towards the house that you're buying. So basically, as an example, if you're buying a £300,000 property and you put down a 10% deposit of £30,000, you're wanting to lend £270,000 from the lender. So a mortgage offer is basically saying, yep, we're happy to lend you £270,000. However, it's going to cost this much in interest. This is the interest rate. This is how much you'd be paying back a month. And here's what it would be in X amount of years. It's very detailed. It is very detailed. And it usually comes after application, credit checks, affordability assessment, and also valuation. So this is kind of like the end of the process when it comes to your mortgage and your mortgage offer and stuff. You would have already sat down with a mortgage advisor or gone to your local bank or a bank, that you bank with, or a bank that you just love, and you'll look at different kind of rates. Now, we actually went to 2 different mortgage advisors and both of them were really, really good. The second one, the best, obviously that's why we went with her. And some mortgage advisors will be free, some you'll just have to pay, and that is just how some of them work. I have done 2 episodes with different mortgage advisors on the podcast, which were so fascinating. So if you're wanting to kind of understand it from, a mortgage advisor's perspective, you need to go and check them out. I sat down with Dan Bates and I also sat down with Tay Farid. So definitely go and watch and listen to both of those, because they go into so much more detail than I can talk about on here, because I'm not a mortgage advisor. I am not within that space or anything. I'm just kind of going by our experience, what we went through, what we, were signing up for, just so you can be a bit more in the know about what a mortgage offer even entails. So your mortgage offer would basically come after your application. So your mortgage advisor would do that for you. You don't really have to do much. You kind of sit back and like let your mortgage advisor do it all, which is quite nice. And I think our mortgage offer came 3 days after our application got sent by our mortgage advisor, which isn't a lot of time really, is it? So we were really, really happy with that. I mean, some lenders will, refuse, and you'll usually do checks and stuff before that. So realistically, you probably shouldn't get refused at the time of when, they put the application through to when you get your actual offer. So the offer will last anywhere between 3 and 6 months, and that will kind of depend on the lender that you go with. So ours lasted 6 months, I think it was. And what will happen basically within those 3 to 6 months, or the whole process really, if you have any changes like in your job, your finances, or you take out like a huge loan or a huge debt, or you buy like a really big something on finance, you probably don't want to do that within this time. You kind of want to leave the big like purchases and stuff until after you get your keys, because the lender wants to make sure that they're going to get their money back. If you just put yourself into more debt, that's not going to look good for them. And also, if you lose your job, that income now isn't a thing towards your initial, offer. So there's a lot to think about. There's a lot of moving parts, and, a lot can happen in like 6 months if that's how long it's taken to get your house and to get your keys. But yeah, your mortgage offer basically locks in your mortgage terms, your mortgage conditions, and your interest rate, which is very, very important. And what you would talk about with your mortgage advisor as well is, if you want to be in a fixed or a variable rate. Now, I'm going to try and do this off my own like memory, but a fixed rate is basically you're fixed into that interest rate. So for example, our interest rate was 5.24, I think we got it in the end. And that's across 2 years. So we've done a 2-year fixed mortgage. Now, we're going to be paying back the exact same amount within those 2 years, and we know exactly what we're paying back every single month. If you went to a variable rate, it is going to be variable within the market, I think. Don't quote me on that. Definitely do your research, or speak to your solicitor, or speak to a mortgage advisor. But I'm pretty sure that it's called variable. It's a variable rate. So 1 month might be higher, the next month might be lower. You just don't know. And for me, I'm good. I don't want to take that risk. I don't want to be paying a ridiculous amount 1 month and then not knowing if the next month is going to be even higher. I just think locking it down into a fixed term, for me personally, is just more security. You got to think, if you know how much you're paying back within 2 years, you're safe and you're settled and you're secure. And realistically, if you have a really good interest rate, like back in the COVID days, I remember speaking to my friend who bought her house back then, and her interest rate was like 1.3%. Something like that, something crazy. And me and my boyfriend have just done 5.224. So that is huge. That is huge. It's actually crazy how much you can be paying back, like when the interest rate is higher. So we're hoping that it comes down soon. That's why we did a 2-year fixed mortgage. So within, like, when those 2 years are up for us, we'll basically reapply I don't even know if it's remortgage. I can't remember. But we'll basically go back and hopefully get a lower interest rate with our mortgage advisor, meaning that we can take like more money in from our monthly income. Hopefully our mortgage will be cheaper. Let's all hope for that, because hope and pray. And yeah, we'll be in a better spot, because paying for a mortgage is very, very expensive. So yeah, that's basically what a mortgage offer is in kind of simple terms. It's a binding offer, but obviously it doesn't go through fully until you get your house. So if your house falls through, you're not stuck with a mortgage on the house that you can't buy because it's fallen through. So don't worry about anything to do with that. It's more of like when you exchange and when you get your keys, that's when the house is yours. Then the mortgage gets put through. I don't even know what goes on in the background. It must be like crazy. But yeah, that's when your mortgage like actually is confirmed, and you will be paying back that certain amount of money each month. So breaking down a few of the key parts of a mortgage offer. The loan amount and term, so that's going to kind of tell you how much you'll be paying back over a certain amount of time, like whether it's 30 years, 35 years. I think quite a lot of people are doing 40 years now, but me and Nathan went with a 35-year mortgage, pretty sure. So that's going to affect your monthly kind of payments. So depending on how long your mortgage is, and yeah, it will affect how much you pay back monthly. Your interest rate type. So like I was saying previously, a fixed rate, that's when you're kind of like locked in for a certain amount of time on that certain interest rate. So like I said before, ours is 5.24. So we're locked into that for 2 whole years. And when those 2 years are up, we can then relook into it. And if the interest rate is really low, we might want to lock into 5 years, or maybe lock into 10 years, or, just to make sure that we know where we stand. It's always difficult though, because you kind of want to go by the market and that sort of thing, but you never actually know what the market's doing. So you kind of just have to risk it and just go with the flow and just hope that you've made the right decision. Because what can you do? You just make a decision there and then and just hope for the best. Another thing is product fees. Now, I had no idea what a product fee was until I got a mortgage. And it's basically a fee that you pay to the bank, which is like an arrangement fee or like valuation, and kind of including with the booking fee. They're all kind of grouped together, but it's basically money that you pay to the bank for using them as a lender for your mortgage, if that kind of makes sense. So our product fee was, I think it was £999. Now, there's a few things you can do with this. One is put it on your mortgage, which we were doing originally, but then it turned out that our solicitor said that we had to pay it up front, which was fine. So we had to pay that about 2 weeks before we completed. Lastminute.com. It was £1,000 that we really didn't want to pay when we were about to move, but it is what it is. So yeah, you can either put it on your mortgage or you can pay it outright. Now, if you put it on your mortgage, you got to think that in X amount of years, X amount of time, it's going to incur interest on that £999. So realistically, if you can pay it and you can afford to pay it off like straight away, then do it. Just pay it outright, and you don't need to worry about that after that. But if you really can't afford it, then just put it onto your mortgage. You can do that, and then you just kind of forget about it. But that's the 2 different ways you can do it, and we did pay ours up front, and I'm kind of glad we did now. But yeah, those are just generally the 2 things that you can do. I'm not sure if there's anything else. It might vary with different lenders, I'm not too sure. But yeah, that's the options that we had anyways, in our personal experience. So within your mortgage offer as well, there'll be kind of early repayment charges, or like information on if you did want to pay off your mortgage early, which would be great. Who would not want to pay off their mortgage early? That would be fab. But you'll have information on there on like overpayments, or if you wanted to move the mortgage to another property, like that sort of thing. And yeah, I'm trying to remember what ours was now in detail, but I think one of the things that was in our mortgage was we can pay up to maybe 10% of the overall mortgage back per year. It was something like that. So basically, we if we wanted to pay like extra money on like overpayments, we couldn't do any more than 10% of the actual like mortgage, if that kind of makes sense. And yeah, what I said before also about moving your mortgage to a potential new property. So a few things to look out for when you get your mortgage offer. Have a little look and see how long you've got your mortgage offer for, because if it's for a short period, let's say 3 months, you kind of want to be aware of that, because if your process does drag out like ours did, you are going to have to kind of reapply for that mortgage with your mortgage broker. And that could mean if your circumstances have changed within that time, then your mortgage offer might not be valid and that sort of thing. So definitely keep an eye on how long it is for your mortgage offer to expire. If it's 6 months, great. Obviously that should be hopefully enough time for you to move into your house. But I will say that when we had our offer for our mortgage, every time the interest rates dropped and our mortgage advisor put us through for better interest rates, our mortgage basically got redone. every time. So like we never actually had to reapply for our mortgage, and we didn't move in for 6.5 months. So I think that's quite a good thing to know, that if you do, like if the interest rates drop and your mortgage advisor reapplies for it, I don't think you need, like, your basically expiration date starts again from there. That's what happened to us. Maybe that happened to you. Maybe it's with different lenders. Obviously we went with Halifax, so maybe that was just a thing with them. I have no idea, but that was just what happened with our personal experience, and maybe you'll experience that too. I'm not sure, because mortgages are complicated. You'll also want to look out for kind of hidden fees, in the small print, especially if they're going to be added to the loan. So obviously like the product fee, you want to know if that's going to be added to the mortgage or not. We actually got a bit worried that we paid the product fee and then the product fee was also still going to be on the mortgage too. So we had to double check that and go through our solicitors and go through our mortgage advisor and just make sure that wasn't the case, because who wants to pay double the amount of a product fee just, in case someone's made a mistake or something. So that's definitely something to watch out for. Definitely read the early repayment charges in detail and make sure you understand it fully, because you don't want to be kind of tied down a lot longer than you expect, like with that certain lender. And then also look at conditions in the offer. So usually, I think with all mortgages and all mortgage lenders, they kind of need buildings insurance and making sure you've got home insurance and stuff before you actually move into the property. So what this means is when you exchange, that's when the house is kind of like legally binded to you. Obviously you haven't completed yet, so you haven't technically got the keys and it is yours, but the exchange is when your deposit money's been paid and you're now legally binded to that property. That is the date that we got buildings insurance, because technically if anything goes wrong in the house from that date, you're going to be liable for it, because the house, even though it's not fully in your name yet, it still kind of is tied to you legally, if that kind of makes sense. So we just did it to keep safe, and then we basically sent the details of our buildings insurance and home insurance to our solicitor. Whether or not they sent it across to our bank or not is, don't know. But yeah, it's just good to know that was kind of done, ticked off, and that's when we got our buildings and contents insurance out. So what happens if things or circumstances in you or like the person that you're buying your house with changes? What if things change? Now, I did touch on this a little bit earlier. Please do go back and watch the other episodes of the Mortgage Advisors, by the way, because they go into detail about quite a lot of these things that I'm about to talk about. And yeah, it's just very interesting and good to know. So if things change, like your job changes, or there's a big new credit, you take out a loan, you get a new car, that sort of thing. Those are things that you should be talking to your solicitor and mortgage advisor about. Practical tips really throughout this process of when you get your mortgage offer to when you actually complete on the house is try to avoid this altogether. Now, it's obviously easier said than done. People can be laid off work. You might have to get a loan out for something that's come up, out of the blue. Things do happen. And, we got our couches ordered within the time of when we got our offer accepted to when we moved in. Please don't do that, by the way. That was a really silly mistake, because we put down a deposit for the couches but still have to pay back a certain amount a month. And that's obviously, technically a loan from DFS. So don't do us and leave that until you get the keys, because we shouldn't have done that. That was a silly mistake. But when things like this do happen, you should really be talking to your mortgage advisor and your solicitor about it, especially like if your job changes, the mortgage lender thinks you're getting a certain amount of income. And if that does change, you could be refused the mortgage. So just be aware of that. So a few key points to take away from this podcast, all about mortgages, your mortgage offer, is don't skim it. Read every single paragraph, every single word, every single line. I promise you, it might seem like jargon sometimes, but it's just so important for you to understand what you're signing. You're signing something very big, very long, and it's a big deal. You want to make sure that you understand what you're signing. Look into a few of the areas that I mentioned earlier, so like the early repayment charges or the product fee, that sort of thing. If you are confused about anything to do with your mortgage offer, you can just talk to your mortgage advisor, ask them to explain it in more detail, ask them specifically what areas that you're struggling to understand, and they should hopefully explain things in more like simple terms for you, because it can be a lot. I remember when we got our offer like through, it was very complicated. There's a lot of words and a lot of, formalities, and it is a big deal. So you have to make sure you know what you're signing. So yeah, that wraps up today's episode on mortgage offer, and just briefly what it is and what to expect, and our personal experience and things like that. Again, do go back to the other 2 episodes about mortgage advisors. They were really incredible and I learned so much information. A lot about remortgaging as well. There was quite some detailed information about remortgaging, which I found super useful, because we're going to have to do that in a year's time. For example, I didn't realize that you had to kind of start the process 6 months before your fixed term is supposed to be up. So for example, if you got out a 2-year fixed mortgage, within 18 months, that's when you start going through the kind of process of getting another fixed rate or that sort of thing. So yeah, 6 months before it's up. I didn't realize you had to do it that far in advance. But now that I know, we're more prepared that we're going to do that basically this time next year, which is actually wild to say. So I really hope you found something in there useful. It was a bit of a shorter episode today, but I'm not an expert in mortgages or I'm not a mortgage advisor. So please do go and speak to a mortgage advisor and get some advice from them. Yeah, make sure you speak to your mortgage advisor and get everything ticked, ready to go for your brand new house. Thank you so much for watching, guys, and I hope to see you next time.